Cheryl, if Cheryl's there. Dylan. I don't know if he's there. Okay, Robert, where are you at?
Watching the cruise ships leaving.
Nice.
No, I'm downtown.
Nice.
In Cole Harbor.
Mhm.
Canada Place.
Yeah.
Nice.
There you
Love
go.
it. And we'll probably have some more people join kind of along the way. It's usually how it is. But
Okay.
yeah, I was just gonna do. Okay. Are we good to go, Michael?
It's all yours.
Okay, perfect. I'll just do a quick social media here. Let everybody know. How do we get it so that it's to me when I'm talking that we can see on the screen? I liked your that one right here. Just want to take a little. Okay, perfect. And we can
Love it.
sit on the social media, say, come on, everybody, come join. I usually do that early.
I have a friend coming.
Okay, perfect. Thank you. Okay, welcome. Yeah, it's been a couple weeks, you guys. So I'm really excited that we're all able to make it today. It is Monday, August the 17th. And for anyone who is new or hasn't been here before, my name is Alexis, and I'm a local realtor and conscious investor. I created this community for like-minded individuals who really wanted a space to come together to learn, to connect, to meet each other, and just explore different ways of investing, building wealth, and but most importantly, doing that consciously and with education behind the decisions that we're making. And, we really cover a lot in this space. Real estate is obviously my world that I'm in. And we've also talked a lot more, everything from alternative investments, regenerative communities, entrepreneurship. And tonight, we're going to get into something a little bit different again, and that's infinite banking. I know that we have talked about infinite banking in the past, but there's going to be a little bit of a twist. So I'm going to sprinkle that for a little bit. And before we get into it, I really do just want to get a quick pulse check on what's happening in the investment world because there's a lot going on right now. Um, and so I'm just curious right now, just drop it in the chat. Where's everybody joining us from tonight? Robert, you had mentioned that you're over downtown, so I'll just plug it into the chat right now. I'm just curious where everybody's coming from. Where are we all at right now? I myself am in Yaletown, Vancouver. And if you're new, just put new beside so that we can welcome you. I don't see any new faces as of yet, but I know that we probably will. Hopefully, we don't have anyone who decides to do an overtake again. That was fun. I don't know if anyone saw that one. It was an interesting session. But yeah, what's happening in investing right now? Like right now, there's a lot going on in a lot of the markets. Obviously, AI right now is just continuing to transform virtually every industry. And we're just seeing enormous amounts of capital moving towards AI and the infrastructure to support that. As well, robotics, I would say, is up and coming. So that's something to watch out for. And while we're also watching this convergence between more of the traditional financing and the digital assets, accelerating. Just a few days ago, I don't know anyone in the room here. Did you guys see what Trump had announced with that family-backed crypto company called World Liberty Financial? It received the conditional approval in the US anyway. So that's going to establish a national trust bank, and that's going to be focused on digital assets as well. So, we kind of stem from crypto in here, a lot of us. And so really curious to see what's going to come from that, but it's focused largely on the digital assets and stablecoin as well. So, I'm not just bringing that up from a political perspective at all, but we're both seeing that in the banking, the blockchain, stable coins. And so whether you're a crypto person or investor or not, I think that, that's something that investors should be paying attention to right now because the financial system like 10 years ago from, it can look very, very different than what it was and then what it's going to look like. And that's something that we talk about quite a bit in these sessions. It's seeing where the changes are holistically as a whole with all different asset classes. And, we don't need to jump into like every new investment that comes along, but I think that we should really be understanding the economics and what's changing. So it's just really interesting what's happening right now, you know? And then also today we had our real estate update. So I had my meeting with my brokerage, Rennie, and they're all about data, all about statistics. And it was a really interesting meeting today because we did see a super, super strong June. It was the strongest June that we've seen since October 2024. So it was, I think it was more of a delayed spring personally that we had because there was some pent-up demand. We got our spring rush. It was just a little bit more delayed because there is a lot of hesitancies in the market right now. But Vancouver is in a really strong position because we've had more inventory than we have in a really long time. And I know I kind of sound like a broken record, but it's we're negotiating really strong. I've done several deals this last couple months in the market, off market, private, just kind of looking at really cool deals that we're seeing that we haven't seen in a really long time. And so, people keep asking me, Alexis, does that mean now is the time to buy? And my answer is, well, maybe. Because, I don't think that this is a market that you're just going to buy something because it's cheaper than it used to be. This is a market that we need to be strategic. And, right now rents have come down a little bit as well. And so, what's the carrying cost that you have on a specific property? What's the value add that you're going to have to it? Is there redevelopment potential? I'm, working with a lot of clients that have basically like product that they want to sell or single family homes that they want to sell, but it just comes down to land value right now. A lot of them are, just looking at Burnaby, for example. That's just an example of someone that I'm working with. And that market has an interesting rezoning that occurred this last few years. So it's a lot easier to have up to 6 units on there, which is great for redevelopment, right? So if you're looking, to get things done faster, Burnaby is a really good opportunity because you can get in there, get the development that you want to, get the permits that you want to. In a lot of instances, we can put that into the deal, into the transaction, into the offer, saying that the seller is to take care of that, which, adds a little bit more time, but then you don't have those carrying costs. Right. So it's these kinds of things, these kinds of deals that I'm looking at right now. So next week, as a result from coming across all these various deals, this creates some opportunity in the marketplace. So next week, we're going to be digging into exactly that. We're going to do a Vancouver real estate investing session based on what's happening right now, what I'm seeing in the market. And I want to make this really, really interactive. So I'm going to have some actual properties that I'm going to have up for display. And we're going to go through how to properly analyze a deal to see, is this a good deal? Is this not a good deal? How do we figure this out? How do we look at the cash flow? How do we find out the ROI on something and what the financial and carrying costs are according to today's interest rates as well? And then we're going to run some numbers. And then I'm going to say, would you buy this? Right? Yes or no. And then we're going to talk about it just to analyze this deal to see if it's a good deal or not. And then if you're interested in the real estate portion, please come back next Monday. As well, before we do get started and into our main keynote speakers, I just wanted to do a shout out to my team who has been working diligently behind the scenes and just wanted to give a shout out to my dear friend Michael Kraus. Michael has been helping me tremendously with the conscious investing, putting it onto our YouTube channel. I'm going to post our YouTube channel in the chat. So for those who weren't able to make it tonight and they know that they're going to be able to watch it, we're going to have it onto the YouTube channel. He has contributed much of his time and very generously providing his support. And so, Michael is the founder of Awaken, and we're going to have him back for another as another keynote speaker very soon, because he has an incredible app that he's working on right now that's really going to like transform the connection between people, personal growth, and tools that are going to help us all live more consciously, which, as you all know, I'm super passionate about. And so, yeah, Michael, I don't know if you want to, if you're on this call, if you want to do just a quick hi, I'd love for you to be recognized for the work that you do.
Thank you. Thank you. Thank you. And the quick hi is just going to be in the background. Yeah, looking forward to sharing again, and also looking forward to hearing Daniel's and Dean's knowledge and wisdom today. And so thank you for the shout out, Alexis.
Thanks, Michael. Appreciate you. And so for tonight, let's talk about infinite banking and our upcoming keynote speakers. Quick poll before we start in the chat. I guess it's mostly just Robert. Robert, put a 1 if you understand infinite banking. 2 if you've heard about it but you really don't understand it, or 3 if you have no idea what we're talking about, but I think you might. And I have to admit, this is one of the reasons why I wanted to do tonight's session, because I've heard about infinite banking, what we can do with it, but now we're going to be seeing what more we can do with infinite banking. And, I absolutely love it myself. I have utilized it. And so, this is not a sales pitch. This is not everybody needs this. We're going to be laying it out, educating you guys, what are the advantages, what are the disadvantages, and how investors can potentially use it to become better investors. And so I especially am excited because one of our guests tonight is someone that I've personally known for several years. Dean is a co-founder of Friends Quarters and FQ Media. He's also an incredible community builder. If you're in Vancouver and haven't experienced Friends Quarters yet, definitely go check it out. We're going to pop the link in the chat for those who are here tonight or who are watching us on our YouTube channel as well. They've created this beautiful space. I've been there several times. It's in Gastown. It's for entrepreneurs, creators, community builders, just like anybody who wants the vibe to come together. They host some incredible events. I've been to several of the events, and I've actually hosted, and Dean and I have co-hosted events together, especially for our conscious investing and conscious crypto events. And we've been going there for years, even though it's changed spaces. The community and the people, it's a top-notch space. And so I wanted to give Friends Quarters a little love tonight because I really appreciate what you've built, Dean, and what you contribute to Vancouver's community.
Oh, thanks, Alexis. That's great. Yeah. And Daniel Henry is also a long-term friend of mine, and we've worked together in the past for the same company. We've built a company together. And we also hang out at ACDC sometimes. Him with his son and me with my teenagers.
Yeah.
So yeah, this is sorry. Go ahead, Dan.
No, it's fine. We rocked out on Thursday night, but
I love that.
Yeah. And so our intention tonight was for this to be very informal, right? So we don't have like a fancy presentation, although we do have some stuff that we can show you. We just kind of want to talk about this thing without getting into a ton of detail about it. Really, if there's anything that's interesting to anybody after hearing this, if they want to learn more about it, there's lots of resources out there on the internet where they can find it, and they can certainly reach out to me or to Daniel for more information. But How do you want to proceed, Dan? Like one of the things I should mention is we used to work together, and so this would be something that we would both do. I'm no longer licensed in the industry, so by the rules of the licensing itself, like I actually can't talk about insurance product, right? So Dan will take care of the insurance product part of the conversation, and I will just talk about things that I know that kind of circumnavigate the issue without me actually getting anybody.
Yeah, you can speak on a high level, but as Dean mentioned, we've 10 years or more or less we worked together in this world, and to touch on what you said earlier, Alexis, a big part of what we do is education, and this whole concept, not a lot of people really understand it until we speak with them, and I talk to people about infinite banking. There's lots of different terms for it, infinite banking, but they often have they say to me, why didn't I know about this, or why didn't I do this before? Because it almost doesn't make sense until you really start trying to get your head around it. So I wasn't sure how long we had, so I put together a whole bunch of slides. But maybe I can pull them up. We can share the screen, and Dean, you could sort of talk through the slides. We could probably skip through some of them quick. And then I did up an illustration for a 35-year-old business owner, what it would look like to do something like what we're speaking about.
Okay, so before you share your screen, I just want to kind of take this thing high level for a second, and just like when people hear the term infinite banking, right? I mean, really, it's infinite banking is good marketing, is what it is, right? Because it really describes a process that people, especially high net worth individuals, have been using for a really long time, and it's not even that complicated of a thing. It's essentially using other people's money, right? So it's the same sort of thing that people do, where they will like like an Elon Musk, for example, has tons of Tesla stock, and so instead of taking a really big salary and paying a whole bunch of tax, he can just borrow against that Tesla stock, right? And then as time goes on, when it's time to repay, like instead of repaying the loan, well, hey, look, the Tesla stock is worth more now, so you can just kind of like create a new loan, and loans are non-taxable. So these things are being used to create capital. So the idea is to use a strategy like this to then take that money and not spend it on parties and vacations, but actually taking that money from an asset and putting it to work somewhere. And as long as the thing that you're doing with that money creates more revenue every year than you pay, to borrow against that asset, for example, whatever the ongoing interest rate is, then you're making a profit. And you don't even need that much of a difference for it to make a big difference over the long term. But what infinite banking is, as opposed to just using any old asset, it's using one particular asset as the basis for this. Call it dry powder, right? So you want to be able to have money that's at your disposal to deploy. So everybody keeps, every high net worth individual will have some of their assets in a liquid form, just either in a bank account somewhere or in GICs or some sort of thing that they've got it in, where they don't have to like sell an apartment in order to take advantage of an opportunity, right? So this is the part of a person's portfolio that we're talking. And so if you're not a high net worth individual, you don't have either good cash flow or like a really strong cash position, this product might not be for you, right? Because it does take diligent investing in this thing every year, because it's a life insurance product. If you stop investing in it, the insurance can get canceled, and maybe you're not healthy anymore. So you actually have to, that's why this product is so interesting, right? Because you have to qualify to get it. There's no other product out there that you can just, you can't just buy from a bank or something like that, right? So, so the idea is they utilize this asset and only this asset for it. And the reason for it will become evident as we go through and we talk a little bit more about exactly what whole life insurance is and what it does. but it's essentially an asset that has guarantees built into it. So once you hit a certain level, it never goes down again below that level. And for an investor who's, sort of like realizing that there's different places that he could put his money or her money and there's risks involved, but there's also risks involved not taking action. This particular asset class offers a really good combination of growth on the money that you're not using and having the ability to access that money when you need it without interrupting the growth in the asset itself. Okay, and so this is a very unique proposition that you can only get from this, and this is where infinite banking gets its power from. So let's go ahead and start, Dan.
I'm going to pull up the slides.
Yeah.
Okay, so
Do you need
we'll
permission
whip,
from-
we'll whip through this quickly.
Yeah.
Now, am I able to share? Let's see.
You might need to ask permission. How does
You
that
should
work,
be able to.
Alexis?
I gave you guys co-host abilities.
Okay, there we
Okay.
go. All right, I can see your whole desktop now. Oh
Well, I
God,
know,
I can
I'm
see your
trying to-
browser history. Oh no,
Oh no, I'm trying to get
I'm
it.
just kidding.
How do I get this full screen? I had it set
You
up.
you want to hit I think it's just start the slideshow over on the left. Just go from current slide. Maybe.
Oh yeah, right there. Okay, so there, as Dean said, what we're talking about, it's participating life insurance is essentially what the product is that is used for infinite banking. And so as now, Alexis, how much time do we have roughly?
Depending on if we want time for Q&A, but we go till 7, so
Okay.
half hour.
So I'll move along here, Dean, and you can talk to the slides and then we'll.
So, did you want me to talk about this slide?
Yeah, sure. Go ahead.
Okay. Yeah, it's called participating life insurance, and this slide is not really very good at explaining what's going on, but it's called PAR life insurance or participating life insurance because what happens is the people that buy policies from these insurance companies get to share in the dividends. They share in the growth and the success of the company. So they participate in the success of the company. So what it's showing you at the bottom is that there's various different types of earnings and various different types of liabilities that go against the participating account, which is all of the money that the insurance company has to keep by law in order to cover their debt obligations in the future. Right? So you bought a policy off them. You expect that if you were to pass away, that your beneficiaries would receive this money. So they have very there's actuary science that goes behind. They know exactly how much money they have to keep for all of these policies. But yeah, there's sometimes the investment returns are higher than expected. There's maybe less taxes. So there's all sorts of ways that this thing can overproduce. And what they do is they give that back in dividends to all of the policyholders.
Policy owners, yeah. Okay.
So these companies in Canada, like 97% of the profit goes back into the policyholder. So this is the first thing that made me think of crypto, right? So it's kind of like decentralized in that sense, where everybody gets to participate in the network effect. So the more people there are out there that are doing these policies and paying into the policies and taking policy loans and paying for the policy loans, then the more we all get dividends, right? So it's kind of like Bitcoin getting bigger and bigger, and all of our Bitcoin is worth more, right? So we're all in this together. It's not a zero-sum game. It's not a competitive. And then the other thing, go back to that last slide for a sec. So this is the thing that, the other way though.
Yeah.
Just press the left arrow. I think you should be able to get there. When
Sorry, buddy.
when dividend, you can't get back.
Okay.
when dividends are credited, one more back from there, to someone's policy, it gets locked in. So what you see is like on the very left would be like the first year, right? You had some dividends and some guaranteed values, and you can see the next year that's all green. That's green because that becomes the new floor. So every year when you get these new dividends, the next year, the amount you had last year is guaranteed. And so you can see that for a number of years, this doesn't matter, but in that last year, maybe that's the year that you needed to access it for something. Giant market crash. You still have access to the full amount of cash value that was credited to your account the year before. Right?
And,
So
and
it's
one of the
got
things,
it's got protection built into it.
yeah, and one of the things about the vesting that Gene's talking about is every year, once that policy is paid for that year, all the values of the death benefit that gets paid out to the beneficiary, but also the cash value that's building up within the policy, those numbers get locked in and they go up every year. So it's the only investment I know that goes up every year, no matter what. And they've been doing it for 100 and is it 140 years now, Gene? 140 years straight?
For some of them, yeah.
Yeah.
Exactly. Yeah. They went up through the depression. They went like these people have a long track record of knowing how to invest. And then the other thing about it is the cash value in a life insurance policy, you still attract the same amount of dividends the following year, even if you have an outstanding loan against that. Right. So you're not actually cashing in the asset when you access it, which a stock, I guess, like, if you take, have stock in Apple and it's worth a lot of money and you sort of bring that to the bank and you can ask the bank, hey, will you let me borrow against this Apple stock? And if you've got a good credit rating and stuff like that, the bank will probably say yes. What the difference is with an insurance policy like this is they are contractually obligated to give you a loan against this policy. So this is the other thing that made me think of it as analog crypto, because obviously this whole strategy here is not outside of the traditional financial system, right? It's not a digital asset like Bitcoin that exists in its own ethos. It's definitely part of the traditional financial system, but it is not part of the banking system, right? So if you can think of times when, maybe the banks wouldn't have wanted to offer you money, but you're still not like piecing out on the rest of the financial system, right? It's not like the end of days or something. You're just a bad risk to the bank. Maybe you're a business owner who hasn't had an income in a couple of years, starting a business. Maybe you took on a lot of debt to finance your business or finance an expansion or something like that, and just doesn't look good to the bank at that moment. Having an asset like this means that you always have, regardless of what the banks think of you at that
point. I'm just curious because I know Dean and myself have talked about this stuff for years, and it can get we could talk for hours about it. But would it be easier for people to understand what we're talking about if we went through a specific example of an illustration for someone? Would that help?
Yeah, I think so.
Yeah, I think so too, because I think a lot of this stuff it's conceptual and you're trying to get your head around it, but what does that actually really look like? So
yeah, one thing I like this slide though, Dan. So this is an investing group. Like we're looking at charts and we're like talking about fairly complex things on a pretty regular basis. Yeah. So the fact that this is going to be on YouTube and people can watch it and they can stop and rewind it, I think this is a very important slide, and it's very specific to Canada Life, which is one of the companies that Dan does business with. So they put out these marketing things. But if you look at where that dot is, that reddish dot, the Canada Life dividend scale. So you can see it's very high up. It's at 7%. So that means 7% average over the last, it's been like 100 years or whatever it is.
30-year average. It's the 30-year average.
The 30-year average. Perfect. Okay. And then you can see the other one, the only one that beat it on as far as returns was 8% on the S&P TSX Composite, right? So, but in order to get there, if you look at the bottom is the risk or the volatility, right? So to get the same level of return, you had to have like basically almost a 16% standard deviation in the volatility. So again, that's 7%. Could be as low as -8%, or it could be as high as 20%. Right, that's what a standard deviation, or 23%. So, whereas with with the Canada Life's version, the standard deviation is only 2%. So you're always getting somewhere around either 9% or 5%. Very steady, very steady growth. The only other things that are even close to that level of low risk, low volatility is like, GICs and bonds and the consumer price index, which is paying you like next to nothing as far as return. So, and there you go. So this is just more about how the insurance company basically gives you access to the value that's built up in these policies. And this is the important part of it, right? Is how you can get guaranteed ability to take policy loans. So that one right there, and guaranteed ability to take withdrawals. Okay. There's too much control over our money in the world where, like, I don't want to get political or anything like that, but if something happened to you that suddenly the government today was fine with it 10 years ago, but now you're doing this thing and the government says that's bad, and they can just shut your bank account down. They may be able to shut down your insurance policy as well, but maybe not, right? Because this is more private. They may not even know that you have this, or I don't want to get all like that sounded very conspiracy theory-ish, but again, for me, it's more like a business owner is in a place in his business where the banks don't like him anymore. And there's lots of examples of this. Like, there used to be a letter that would float around our office, and it was from Jim Pattison. A letter that Jim Pattison wrote to his financial advisor because he ended up having to lean on an insurance policy that his parents had bought him to get, I think it was his first car loan, right?
Yeah.
Dan, if I'm not mistaken.
First business, his
Right?
first business, he used his policy. He leveraged his first policy to start his first business.
Yeah. And because he didn't have any money, the banks wouldn't give him any money, but he had access to this. And so, this is the analog crypto version of it. The fact that even if the banks say no, you have to get access to it. You can't say no to you. And then you can also leverage it with loans. So if the banks do like you, if you are in a good spot with the banks, then you can just take, and you can get a loan off of it. So, and then of course, at the end of all this, it is life insurance. So there's even more that gets left behind for your family if anything has happened to you. And frankly, for me, as someone who has always had a fair amount of my net worth in digital assets, I just want to say this, like, I'll just be really real with you. Like, I don't know how much of people's digital assets will make it to the next generation. Okay, I don't know how many people have done a really good job of like writing down their public and private keys and having the seed phrases and stuff like that, like available somewhere where their next of kin will find it and know what to do with it. I think it's a massive problem that people haven't really registered yet. And so for me, knowing that peace of mind of knowing that I do have like life insurance, so even if I screw up completely and nobody has access to any of my after I die, they're still going to have this money to make things easier, make my passing easier, and I'm not going to be there to give them the wedding gift, so they have the money now.
Okay, so Dean, I'm going to pull up.
That made me sad to say. Life insurance makes me sad, Dan. How do we make this happy again?
Life insurance. Good question. Well, I'll pull it. You know what? I'll pull up an illustration and walk through that. As
you have a good life insurance joke that can like ease the tension?
I should, but I don't. That I can think of.
Okay. So what I used to tell people when I was in the industry is I would say that it can seem like a gruesome topic, like insurance thing on. And I just want to say that's not what this is. So this is a product where you pay into it and you get to access the wealth that you've created during your lifetime and create something that you can pass on to to your kids,
Okay.
right? So
Now
the illustration, I think, shows it all.
now can everyone see my screen now, the illustration I'm
Yes.
showing?
Yeah.
Okay.
I can't see the illustration. I'm still seeing the presentation. You might have to stop sharing and then share
Yeah.
like the whole screen or the
Yeah.
whole window. As opposed to all
Now,
right.
yeah. Now, as Dean mentioned, I've got a pretty good relationship with Canada Life, so I talked to someone at their office about some slides and things like that. That's why I'm using Canada Life material here, because it's rather than reinventing the wheel, they've done a lot of this stuff already. But I'm licensed to sell for Manulife, Equitable. There's lots of insurance companies, but I do a lot of work with Canada Life, and that's why I'm using their illustration right now. So what I did here is I created an illustration for a 35-year-old non-smoking business owner. And the reason I did business owner is because, without getting into this too much, these types of policies can be very powerful for a successful business owner as a more tax efficient way to pull money out of their company. But what I've done here is I've created a life insurance policy. As I said, a 35-year-old healthy standard rated person paying $50,000 a year. Now, the way this is structured is they don't necessarily have to pay the full 50,000. The minimum premium is 17,000 a year. But as you can see on this line here, it's an additional deposit option of the 32,000. Now, what this does is it's almost like overfunding your policy. So you could, in theory, if you wanted to, shorten the amount of time you pay the policy. So you could get these down to the 6-7 years, where you could say after 6-7 years, you know what, I'm good. I don't want to put any more money into the policy, and you can freeze it, and then that life insurance will be there for your lifetime, and it doesn't expire. So just to go quickly here, because I know time is of the essence. If you were to pay $50,000 year one, 35-year-old, your life insurance starts out at over $1 million. So with this illustration, year one, $50,000 is paid. Your life, the death benefit has risen to 1.2 million. Now, the exciting part that we're talking about now is the cash value within the policy. And there's two components to that cash value. There's the guarantee part that's written in the contract, but there's also the dividend value, which Dean has spoke to a little bit there. So as you can see, year one, 50,000 has been paid into the policy, but now there's $45,500 of cash value within that policy that you can leverage, that you can borrow against, you can use if you need it. And the great thing about these policies is once they're in place, you don't have to apply for this. This is written in the contract. So you've, in essence, created a line of credit for yourself that you don't. So even if you go bankrupt and you have bad credit or what have you, or you're over leveraged and you can't access money, this money is available to you no matter what. So if we move along here, I just did this over 20 years because this person's young, and just to show how powerful these can be. So paying $50,000 a year over 20 years, that brings a 35-year-old to 55 years old. The death benefit, and again, this gets paid out tax-free, is almost $4 million. And the cash value has risen to 1.5 million. So what someone could do at that point is say, okay, I'm going to put this on what we call a premium vacation, where I don't have to pay another penny into this policy. And I could borrow out my money. I could borrow out the $1 million I put into it, or I can borrow up to 1.5 out of this policy. If I'm borrowing that money to invest, now I can write off that interest. But if you borrow from the insurance company, they just become the first payee. Once you pass away, they get their 1.5 million, and whatever's left here gets paid to your beneficiaries. So in this scenario, you've created $2.5 million tax-free money that gets paid to your family, your estate, and you've gotten your money back if you want to do it that way. There's many different ways of structuring these policies where you can access the money yearly. You could you could have it for a rainy day or an opportunity. So say for instance, when this person's 41, they want to buy a condo and they need 300 grand for a down payment. There's that money right there that they can borrow against.
Right.
And,
So
and
that's,
go ahead, Dean.
I was gonna say, that's how insurance people talk about this policy, right? And Dan's right to do that. That's what he does. But as an investor, like I would be looking down that column of the total cash value, and just thinking, oh, how much dry powder do I have? And when is the next low in the Bitcoin cycle? Right?
Yeah.
So I imagine like if I had put this thing in place, and I personally have a policy uh like this. It's not that rich. I didn't have $50,000 a year to put in. Um, but I have 100% access the cash value in that policy and bought Bitcoin with, right?
Yeah.
And the beauty thing about this is that for most of us, like when we buy different assets and we have an intention to sell, again, I don't know how many people that are on here have bought Bitcoin. I can tell you, Bitcoin is very hard to sell. And I don't mean in the way that it used to be hard to sell because it was complex, like you had to understand wallets and everything like that. It is much easier to sell Bitcoin these days because you can do it on Wealthsimple, and there's lots of platforms that have very easy user experiences. What I mean is it's hard to sell it because it's always on the way up or on the way down. And it always feels like the wrong time to sell Bitcoin. And the thing I like about this strategy is because I've borrowed to invest, I do have this ongoing obligation where like I'm using um, dividends from my policy to pay the interest on that loan, right? And that, in one part, my baby
Hard to hear you,
boomer,
Dean.
my
I think
brain
you're,
that was raised by baby boomers finds it. Can you not hear me now?
yeah, you're fine.
Okay. Makes me want to be very frugal. And so like if I have a debt obligation, I want to pay that back. And so that gives me incentive in the next part of the Bitcoin cycle, when Bitcoin's kicking ass, we're at all-time highs. We're kind of around that place, where in the green area, we're always told you should probably sell, and then we never do. Um, now I can sell that because I know that I want to pay this policy loan back, right? And then I sell a little bit extra, so I've got even more dry powder. And the next time Bitcoin goes down, buy back into it. And so by using this process, it encourages us to do the thing that we emotionally don't want to do because we have this sort of debt obligation against us, and we want to be able to pay back these policy loans. So
Yeah.
that's my suggestion for how to use this infinite banking strategy. And again, it doesn't have to be Bitcoin. Right? It could be that, Alexis has an amazing real estate investment opportunity. And, instead of having to, Dan, you and I were just talking about, a situation where someone like sold off their Bitcoin and bought a property, right? And I imagine if that person had access to one of these policies that had the same amount of cash value in it, they would not have sold their Bitcoin. They probably would have taken it out of the cash value in here instead. And done that, right? So
And one of the things, this number, the 50,000 that I use, is just for illustration purposes. It doesn't that it it's just so people understand conceptually what this looks like. It does that number can be whatever makes sense for the person. So we often what we do is we sit down with people, we figure out what is your goals, what are you trying to accomplish, what's some tax liabilities down the road that you might want to look at, how many kids you have, if you're a business owner, how you structure things, and what's a number that makes sense, that's comfortable enough where you're not stressed every year paying this policy. So again, these
I would
things,
just,
these
I
things.
would say,
Mhm.
I'm sorry to jump in, Dan, but like, especially for business owners where you've got partners, like I'm not here to sell these policies. I don't do that anymore, but I have seen the difference that it makes in a situation where you do have a number of business partners. So at some point, that those shares are going to go to other people. So there will be a tax obligation at some point. Someone's going to die, someone's going to need out. And having these policies in place can really make a difference down the road with something like that. So
Mhm.
it's really a good, it's just proper like empire building. Is to
Yeah,
have this kind of stuff in place to make sure that when those black swan events come along, you're taken care of and you can just keep on going.
yeah. It's now it's 10:02, so maybe we can open this up to a few questions. Because I know we probably only have about 10 minutes here. If there are any questions.
And if you want to stop,
Alexis,
if you want to stop screen sharing, then we can bring your images
Yeah.
back in.
There we are.
There we go.
So thanks, guys.
Right.
Um,
Yeah.
yeah, I don't know if anybody here, I saw a few new people that joined the chat here. I'm not sure how far, but they got into this. But does anyone have any questions in our community?
I thought I could jump in for a second. Alexis, did that? You were here for the the whole thing, and you also have one of these policies in place.
Yeah.
Did that clear things up for you at all, or does it make did that does that help, or was there anything that was confusing for you personally?
No, I mean, I've been using this for a while, so
Okay,
yeah, I've used it to buy a real estate property that I'm going to be moving into here.
awesome,
Yeah.
awesome.
Nice.
Yeah,
So
and I was
okay,
able to borrow
Perfect.
against it and
mhm,
and also what I had accumulated. I had several insurance policies that I got when I first got into real estate. So only a few years ago, a while ago. And I didn't realize that I had all of this capital sitting there that I was able to pull out. And so when I reached out to my financial advisor, this is going back to my Edmonton days. That's where
yeah,
I'm from. I realized that there's quite a bit of capital sitting in there. And then furthermore, I realized that I was able to borrow against that borrow against it and take out even more.
yeah,
And so I did that too, and was able to kind of diversify to different asset classes.
yeah,
Perfect.
yeah, awesome.
Yeah. You're using it right.
Yeah. I'm still, and like, I still have my whole life policies as well. I have
Yeah,
multiple. And so I'm still contributing, but, it's been a game changer for me and I'm really grateful for it. So I think
yeah.
everybody needs to have this.
I do too.
Mhm.
Because some people too, you can almost look at it like a pension for yourself too. Like if you fund this over a period of time, when say you do this for 20 years and you get to 65 and there's cash built up in your policy, you could say, okay, I need to supplement my retirement for the next 20 years. I'm going to pull out 40, 50K a year over the next 20 years just to live the life I want to live in my retirement years. So again, you're creating more flexibility for yourself if you wanted to look at it that way as well.
And one of the biggest advantages that I found when utilizing this banking was that it doesn't show up when you go to apply for a mortgage.
Yeah,
Mhm.
that's a very good point, actually.
Yeah.
Yeah, it doesn't hurt your debt. What's it, debt service ratio?
Yeah.
Yeah,
It doesn't show up on there.
Right.
yeah,
Yeah. So
Yeah, I guess it's a bit of a trade-off because the asset doesn't show up either unless you show it to them.
right, which has some tax advantages too, though, right?
mhm,
Well, it's the main advantage is creditor protection, right?
Yeah.
If there's a named beneficiary to the policy. So again, that's one challenge about holding it corporate and having the corporation be the
the
beneficiary. I
owner.
think you lose some of that creditor protection for the owner. But yeah, if you're holding it personally and it's actually like the beneficiaries are your kids or whatever, um, if you lose everything, that's why I think it's a really good point that you make, Dan, about that it being a potential retirement strategy. Like again, maybe you're like, oh wow, that's I planned on living a much more lavish lifestyle in retirement, but at least I've got this. You know what I mean? And it might just be a lifeboat, but if you have a lifeboat and nothing else, you're really happy to have a lifeboat, even if
Yeah.
it's not
Yeah,
as big as you wanted shipped. So something just to stay afloat is like a lot of people I think would love that. Mhm.
Totally. And I guess like on the flip side though, who do you think this would not be? Like, was there any disadvantages? Is there anyone who this might not be?
Yeah, people
Well-
that don't have consistent cash flow, or like a good chunk of assets that they can slowly move into a policy like this. Because again, once you start paying for that policy, you're taking on that obligation. So, again,
Also-
the one that Dan showed, it was like 50 grand a year. Okay, I could go down to 17 if I wanted to. But for someone who's like really struggling, 17,000 a year into a policy could be a lot. So that's not a good idea if you're at risk of something like
The other one that's sort of sad for me sometimes is people that aren't healthy. Because these things aren't guaranteed either. You have to be healthy enough for an insurance company to offer this to you. And I've had people want to do this and they're excited about it, and then we find out that there's some issues there,
Hmm.
which in some ways you're getting a free medical and you might catch something early, but they're not guaranteed for everybody. So the younger you are, the better the numbers look, because actuarial science, these guys are good at what they do. They know that the younger you are, the more likely that this policy is going to be paid for a longer period of time, and they'll make their money, and these policies will be around for a long time. As you get older, the numbers don't look as good. Yeah.
Yeah,
that. I know it.
I did it. I started when I was like, I don't know, late 20s, around
Good for
30.
you. Yeah,
something like that.
good for you.
Yeah, I was actually dating a
know.
guy who was in this insurance thing, and
That
he,
makes
There
sense.
you go.
yeah,
That's-
so, yeah.
That's how it happens. That's how
Yeah.
we get you.
Yeah, but I'm thanking him now. I'm like, thank you
Yep.
for, making me get 5 or whatever insurance policies, because
Yeah. But it is an asset class that not a lot of people know or understand. It's important. Real estate's important. So people have stuff in the stock market. They have mutual funds. It's just another one of those asset classes that isn't
Crypto.
correlated.
yeah,
Crypto. Yeah. They're not.
Don't forget stamps.
Yeah. Yeah.
Don't forget my coin collection.
right?
That's worth something, right?
Yeah.
What about my collection of
I have
Yeah.
like
Hot Wheels?
like hard silver and gold as
Yeah.
well.
Yeah.
Mhm. Yeah. But eventually you get tired of carrying that around, It's heavy.
Just-
I just like it all, and I like my hard assets and then digital assets and all the
Yeah.
things. It's like,
That's
It's-
diversification.
It's
That's-
all about diversification.
yeah, it's
The
nice
reason
to
why
be-
the reason why I'm so Bitcoin fan is it's diversification
yeah,
outside of fiat, right? And I looked at whole life insurance as diversification outside of the banking system. So
Hmm.
it's like crypto like it's not quite as away from the system, but it's still within the system. So I think it's a good bridge for people. Dip their toes in, using
yeah. I'm
it.
really curious to see what's going to happen. Like if this banking system starts like with Trump, Liberty.
It's ironic. Reason why main reason why I'm in finance today is because I was told I had to choose.
It's hard to hear you, Dean.
Bitcoin. I was told I had to choose between Bitcoin or crypto and my license. So that's why I'm not in the finance game.
Yeah.
Wow.
Yeah.
So,
there's
guys,
a-
I have to go
there's a
coach a
story.
soccer practice right
Yep,
now,
and it's 7 p.m. right now.
and
Perfect
it's
All
time.
7 o'clock.
Well done.
1 minute,
Yeah,
but yeah, thank you so
much.
much, everybody.
By the time we're done.
Can you
you-
just stay on for 1 minute after we stop the recording? I want to say something to you, but I don't want this to be on
Sure.
the recording.
Sure.
So let me end the
Great.
let me end the
Okay.
Thanks so
recording.
much, guys.
All right.
Thank you.
Thanks for having me.
Friends.
Hold on for a second.
We'll see you next week.
See you, Alexis.